Kia ora, I'm Ria Cal, Senior Strategy Analyst at BDO, and today I just wanted to share with you a few strategic tips to help you and your business navigate through this COVID-19 crisis at the same time as we're all still trying to understand what a new normal may look like on the other side. This balancing act for critical decision making is the new reality we all face, and as we continue to come down different alert levels and open back up more of our economy and our lives, I'd also like to acknowledge that this has been a significantly trying time for the majority of business owners and organisations here in Aotearoa, and particularly those in the SME sector. As more of these businesses now emerge out of the hibernation that was alert level 4, we'd like to encourage them to take the time to refine and redevelop their current strategic plan, starting by focusing on what different scenarios may affect your business model. Consider how, where and when you might need to adjust or reprioritise these, and also note what information may be required to support this decision. Prioritise creating a plan that is focused on enabling a calm environment for clear decision making based on the most up-to-date information possible, and also be realistic about what success needs to look like at the end of this, be this both financial and non-financial. Make sure your plan includes all those wild and crazy ideas you've had during lockdown, as well as anything that may be keeping you up at night. And above all, let's remain positive and realistic. There will be better days, but by taking the time to come up with a plan, sharing this with your team and with your clients, we can all support each other through this. He waka e ki noa, we're all in this together. And on that note, I'd now like to pass you over to one of our BDO partners, Doug Haynes, to share with you some cash flow planning tips and tricks to help you through this time.
Hello everyone out there. Cash flow is one of the 3 critical success factors you need to manage to ensure you get back to business successfully. Let me provide you with a few tips. Once you are reasonably clear on what your revised strategy looks like, we recommend you forecast your cash flow to make sure that the plan is financially feasible. The forecasting should include some sensitivity so you are prepared for the worst case. None of us have a crystal ball, and so this will be difficult, but this exercise will at the very least draw out your break-even point. Don't forget to include and review planned capex, and of course also include debt repayments. We advocate for forecasts to be prepared for at least 12 months, and include profiling around daily bank balances, because a monthly cash flow won't highlight any troughs during a month. And this is a key issue when it comes to your banking relationship. The message we are getting loud and clear from the main trading banks is that they are all prepared to help as much as they can, but they need you to crunch the numbers with us and talk to them sooner rather than later. You need to be extra vigilant when it comes to debtors paying on time. The strength of your relationship will assist in some cases, so do make sure you talk to your customers on a regular basis. You may need to be flexible and patient in some cases, and don't forget to continue to register PPSR charges if you need to. To assist in getting paid on time, make sure you are getting your invoices out as quickly as possible, i.e. as and when you complete the work or deliver the goods. A monthly billing cycle might be efficient for you, but delay vital cash for your business. You've also got to look at your tax payments, and Ian will run you through a few options and incentives available.
I just want to take a few minutes to recap on the government's care package that they've extended out to taxpayers and businesses. But before I do so, I thought I'd share with you a little care package that was sent to me prior to lockdown. This was sent to me by a friend, appropriately titled Care Package, and it's a wonderful bottle of one of the early releases of whisky from the Cardrona distillery in the South Island. Now, what this care package sends to me, or says to me at the moment, is just how important it is for businesses such as the Cardrona distillery, a small New Zealand business taking on the world in an established market, how important it's going to be for us post-lockdown to look after each other and to support those businesses. So that was a great care package. But to the tax reforms, the government thing, I think the couple of things that need to be really emphasised, aside from the wages subsidy and the bank guarantee schemes, are the reforms around tax losses and the willingness of Inland Revenue to remit late payment penalties and use of money interest. Inland Revenue's early announcement that they would remit use of money interest and late payment penalties when you couldn't pay your tax because of COVID-19 was really welcome and represented an unprecedented willingness to work with you in getting you through this difficult time. What's clear is it's good practice and you should continue to file your tax returns on time. If you can't pay your tax because of COVID-19, we would recommend exploring all existing options and not assuming that you're going to be able to be granted relief from the use of money interest and late payment penalties, because there will be some situations where it's not appropriate, and it is an application that you have to make rather than a guarantee that it will be remitted. But I think the revenue will be very accommodating. And the subject of tax losses, well, we've introduced a 1-year carryback. This is introduced as a temporary relief. But if you have incurred a tax loss in the year to 31 March 2020 or 31 March 2021, you get to carry it back to the previous immediate year. And if you've paid tax in that previous year, you'll get a tax refund. So that's really welcome. Hopefully it might become permanent after appropriate consultation. Secondly, they've introduced a same or similar business test to allow you to carry forward tax losses. Now, carrying forward tax losses is subject to a thing called shareholder continuity. So when you introduce a whole bunch of new investors, you can forfeit your tax losses. So having a same or similar business test will be really welcomed by many companies in that startup kind of phase who are always hungry for capital and looking for new investors. Look, there will be some challenges around how you define what a same or similar business is, and there will be challenges or anti-avoidance provisions to ensure we don't end up with trading and tax loss companies. Don't forget there were other smaller amendments, but equally important. The write-off of low value assets. So if you increase in threshold from $500 to $5,000, I jokingly say it's about the cost of setting up a home office to allow you to work from home. Tax depreciation in commercial buildings, greater refundability on research and development tax credits, and a whole bunch of relaxation of sort of timelines and administration. So don't ignore your tax, it's still really important. You can find out all of the details from our COVID-19 microsite, and I wish you well, stay healthy, and if you need some help, reach out to BDO, we're here to help.